Hello and welcome to Inside Out. Well, the new year brings new hopes as investors track global macro volatility. How does one approach the market though in 2023? Which are the sectors that offer some promise? To discuss this and more, well, we're going to be getting some help because we'll be joined by Siddhartha Bhaiya as well as Jiten Parmar. Both of them will be with us shortly. Hey, Sonal, 2023, it's promising to be an absolute cracker.
Oh, yes, and that's what we are planning to discuss in the show as well, right? So, gentlemen, thank you so much for joining us today here and wishing both of you a very happy new year. May 2023, as Nigel said, be cracking for two of you as well. And now that we begin the show, I want to be speaking to both of you. We do have a cheat sheet. We know the sectors that you like, but we want to know why. So, Jiten, let me begin with you. You have been bullish on chemicals theme, some of the stocks there as well. A lot of things working here. We're talking about global volatility. At the same time, we're talking about Europe +1, China +1. In that case, what is making you bullish here? And a possible, individuality that you're seeing in some of the stocks as well. What are you liking?
Yeah, so good afternoon and wish you both a very happy new year and all the viewers of CNBC wishing a prosperous and happy 2023. So let's get back to the themes and sectors which I like. So financials and banking is something which we think should do well in this year. What we need to focus is on basically sectors which are more of domestically focused and basically some sectors where Europe +1 and China +1 can play out. We need to avoid sectors which will be impacted by the European and the US slowdown. That's our philosophy which we are following. So financials and banking we think will do good. Capital goods manufacturing is another theme which we like. Cement is another sector where we think that valuations are in favor in many mid cap and small companies. Infra is something which we think should do well in 2023. A lot of good companies are available at very decent valuations.
Right. Right, Jiten, we'll discuss the other themes as well. But for the time being, we wanted to focus on chemicals itself, and you're quite bullish, I believe, on that space. And you're choosing a couple of themes out there, right?
Yeah. So chemicals has gone through a difficult time
Yes.
last year, and we believe that so we believe in investing in themes where there is short-term headwinds and long-term tailwinds. We believe that specialty chemicals is something which will do well over a very long period in time. It's just the volatility we have to basically ride over, which we have seen in the last year and a half. We believe that the worst should be getting over for them max in Q3 or Q4, and from there things should do well. So a lot of chemical companies valuations have or are becoming attractive, and that is something which we are looking at. That would also include the API manufacturers and so on.
Got it. All right, Jiten. So I think, Aarti Industries as well as Gujarat Alkalis, that's a couple of stocks that you have been bullish on in the past as well. So we have noted that. But Sid, let's come across to you. And you're looking quite bright and quite happy as well, Sid, joining in from a cruise. But you have a view as well on the chemical space. And, we get the management of Deepak Fertilizers. They join us quite a few times and they're talking about moving to specialty chemicals. Some part of the street doesn't believe so, but you have a view on the stock?
So, chemicals is if you manufacture the chemical, you're a specialty chemical. If somebody else does it, it's a commodity chemical.
Yeah, okay.
Right? But Nigel and Sonal, wish you a very happy new year. And happy new year to all the viewers. My connection is a little bit unstable, so please bear with me. I'm in the middle of the sea.
Sid, you're very clear, Sid. You're absolutely clear,
okay,
the middle of the sea, but we are happy that we can hear you. Go ahead.
Lovely. So I think Nigel, chemical, again, as I said, it's a very tricky space, to be honest with you. Prices go up and go down very quickly. What's happening in China is very difficult to suggest. We've been shareholders in Deepak Fertilizer for a number of years, to be honest with you. And it's only recently over the last couple of years that the company started doing well. Right, they're one of the largest manufacturers of technical ammonium nitrate in the country. They're also the largest manufacturer of isopropyl alcohol and only one of two manufacturers of nitric acid in the country as well. And it's very difficult to import nitric acid, right? If you just note that Aarti Industries has signed a very long-term contract with Deepak Fertilizer for supply arrangements for nitric acid. And technical ammonium nitrate is again a direct beneficiary of increasing mining activity. Very difficult to import technical ammonium nitrate. The government keeps a very, very close eye on technical ammonium nitrate. In fact, every single kg of technical ammonium nitrate is tracked towards end use, because technical ammonium nitrate can also be used for making explosives.
Okay.
So Deepak, according to us, is very well positioned. And yes, with the new ammonia plant coming up in the next 3 to 4 months, you could see massive gains in EBITDA for Deepak.
Yes. And, you know, trust me when you say it's a tricky space. I've been tracking this space for a long time. The difference between commodity chemicals to specialty chemicals and a lot more, of course, needs to be tracked very closely. Jiten, now we've spoken about chemicals and we've spoken about what you like in that space as well. One thing that you started the show with was financials, because we've been seeing this big upsurge in PSU banking names. They have been an outperformer this year, and the last quarter was one of the best quarter in 7 years. What is your take here? Why do you like this space, first of all? Do you expect this rally to continue that we're seeing? And a couple of names here as well.
Yeah. So basically, financials banking is something which we had zero exposure till March of last year. For 2 years, we did not have any stock in that. The reasons were that there were a lot of issues in the cycle, primarily due to COVID and the slowdown which had happened before that. But we could guess that the worst of NPA crisis is behind, and we could see some green shoots in credit offtake also last year. So that's when we initiated and we went into quite a few stocks, the largest PSU bank, the largest housing finance companies. Then subsequently we went into a couple of more PSU stocks, ratings company, and so on. So and we believe that this cycle should last for another 2-3 years at least. So this space is well positioned, but at the same time we are very mindful of what we are going to pay and what valuations they are trading at. So we still think that there is a lot of room for the financial sector to do well.
Right, and I think the largest PSU is something that you've been positive on. SBI is something that you have liked, Jiten. But Sid, let's come across to you. If you could tell us, you like market leaders, and Gujarat Ambuja Exports, that's something that you're quite positive on. It's a market leader in its space. I think it's sitting on a strong balance sheet, and bulk of the capex is already done. Tell us more.
Right. So I think, see, again, Nigel, the one thing that I want to caution all our viewers is we've been holding these stocks for a number of years. Most of our top 5 holdings we've held for nearly 7 odd years plus. We first bought JEL nearly 10 years back. So please don't use this as a reference to, go ahead and buy these stocks. We bought it at, at a fraction of what the current market cap is. So GAL is the largest in maize processing in the country. They plan to double their market share over the next, so they plan to double their capacity over the next couple of years. They've recently had their Malda plant, come in this. Today, they've nearly 700 crores net cash on the balance sheet. Management is extremely, extremely strong, right? Still quotes at single-digit PE multiple. I think, right, an industry leader with more than 25% market share. And demand for maize products and maize processing is only going to increase, and exports for this company are also doing extremely well. So I think this is very well positioned, a lot of margin of safety, industry leaders, healthy balance sheet. This is what we look for when we buy companies, and typically then we hold them for a very, very long period of time.
Okay, and we need to take that disclosure on board that Siddhartha said. They have got into some of these stocks rather early, so just telling our viewers to keep all of that in mind as well. But the other big theme, gentlemen, that we've been talking about is infra. And I believe both of you all, are pretty positive on select companies out here. And with good reason. Sid, you go first this time around. Tell us, how do you want to play this team? I think Technocraft is one of the stocks that, that you all were looking at as well.
We have loads of infra in our portfolio, Nigel, and we've been holding on to some of these stocks for a number of years, again, as he said. Infrastructure, if you look at it, 2007-8, there was a big boom as far as infrastructure was concerned. Last 13 years, globally, you've not seen any investments in the infrastructure space, whether it is power, whether it is, railways, whether it is this. You're seeing a massive government capex and private capex coming across sectors, whether it is defense, railways, roads, ports, you name it, and you're seeing capex. right? And this sector has barely got any capital allocation, not just in India, but abroad as well.
Okay.
So we own a lot of infra plays in our portfolio. I think all of them across the board will do well.
Okay, all of them across the board. So one of them you just spoke about in detail as well. Jiten, your take, because you do like infra as well. You've liked them in the past, couple of them. And the last one I knew or I read about as well, that you like PNC infra as well. Can you tell us generally what's the outlook on infrastructure space?
So we are very, very positive on infra. Some of these companies who have a long history of 20 years kind of operations, gone through all the cycles, gone through bad times, and still surviving and having a healthy balance sheet, debt in control. These are the kind of players we would look at, and these are available at very, very attractive valuations even now. And the growth in infra is basically a no-brainer. So I think India is spending probably the highest amount on infra ever in its history, be it road infra, be it railways, be it ports, and so on. So infra companies is something which we are very, very positive on. But yes, selection is very, very key. And I also would like to add a disclaimer here that a lot of these things which we are discussing on, we have been early investors in that. Quite a lot of them have actually run up. So viewers must exercise caution, before they look at something. Our philosophy is that if it is become fully valued, we might exit also. So that's the disclaimer from my side too.
Okay, point taken, Jiten. Of course, that disclaimer is important. Thank you for pointing that out as well for our viewers. Okay, we'll continue this conversation, but it's time for a short break now. We'll continue our chat with Siddhartha Bhaiya and Jiten after this very short break. Stay tuned. Welcome back. You're still with us on Inside Out, and we still have with us on the show Siddhartha Bhaiya, who's the managing director and founder at the company, and also we have with us Mr. Jiten Parmar. Gentlemen, well, we've been talking about a lot of themes right now, but one theme that I think both of you like, let me start with you on this one, Siddhartha, first up. It's APAR Industries, like a name we don't hear so often, but this is something that is in your portfolio as well. Tell us, what is it that you like about this one, and what kind of fundamental positives are you seeing here?
So Sonal, I think APAR is one of the largest in conductors globally. Okay, it is third largest, if I correctly collect. It is the largest domestically. It is also one of the biggest as far as specialty oils is concerned. It is also big in cables. Look, it's more than $1 billion turnover company. A big play on railways, a big play on renewable energy. In fact, a year back, the management told us that because of the push on renewable, the entire grid worldwide will have to be, reset. They will have to rebuild the entire grid. And they're seeing it's a big play on, China plus one as well. Big export opportunities for this. In fact, you're seeing a lot of transmission orders being won by Indian companies globally, whether it is Larsen, KEC, Kalpataru. And APAR is one of their preferred suppliers for most of these companies. So I think APAR is very well positioned. Again, very healthy balance sheet, cash on the balance sheet, attractive valuation. The stock has run up quite a bit of late, but looks very interesting from these levels. They were very, very strong order book, and the visibility for the next couple of years is very good.
Okay, all right, got that, Sid, and even Jiten has been reasonably positive on that particular stock. But Jiten, I wanted to ask you about another theme that you have been tracking, the manufacturing theme, various other stocks in there, whether it's a generator company, some turbine companies as well. Tell us more about that theme that you have been positive on, and I think you'll have got in early in some of these themes as well. Go ahead.
Yeah, so we got in these stocks in 2021, and just to disclose that quite a few of them have actually gone up multiple times, but we still continue to hold. See, capital goods and manufacturing had a big down cycle for about 8 years. So back a couple of years back, we could see some green shoots, and that's where we started recommending these stocks. We believe that these companies will do very well for the next few years at least. Europe plus one and China plus one is definitely playing out. When you go on the ground and talk to companies and people, you understand that there is a plethora of inquiries and orders from Europe and so on. So these companies actually, a lot of these companies are actually turning away orders, is what I've also heard. in the sense that, they were so much work. So this team should do very well. Of course, valuations one need to be mindful of what they pay, but we are very, very positive on this team. We continue to hold most of the stocks which we have recommended.
Okay, interesting. So the list is on the screen as well. That point is taken, Jiten. Siddharth, let me come to you on this one, because power mech projects, we've been talking about the theme generally, but this is something that you like and have in the portfolio as well. Tell us more here.
I think, see, again, a capital goods company, they have a very, very strong order book, right? Book to bill ratio is close to 7-8 times. It's a 24,000 crore order book. Valuations are attractive, right? A big play on coal, on metals, on power. They're one of the largest as far in O&M space in the power sector. They work with all the public and private sector power, power plants in the country. So I think again, looks very, very good. Balance sheet is very healthy. Valuations are very attractive, and yeah.
Okay, all right. Got that, Sid, and you all have been positive on this one. I think it's up, multiple times, I think, already for you all. That's Power Meg. But Jiten, but at the start of the show, you told us about some cement companies that you like. I don't know whether you can share some names, but do you like the smaller cap ones, the mid cap stocks? And if you could tell us the sector, the geographic, preference, whether it's the south-based companies, the west-based companies, go ahead.
So we like mid-cap companies more in this sector, which have presence across multiple regions. Obviously, we do have some small south-based players also, but primarily we do like the ones which are there in multiple regions. So the top ones are quite, fairly valued or overvalued in our valuation methodology. So we are looking at companies which are mid cap and which will become the large cap cement companies. The valuations are very much in favor in these companies. They are at half the valuations of the large caps and so on. So that's what gives us a lot of comfort. Cement doing well is also a given because infra is going to do well. Real estate is going to do well. So cement should do well over the next 2-3 years. There will be some capacity additions also, which will keep on happening. But I think that the growth will be higher than the capacity addition. So your capacity utilization will improve. And I think Q2 was the worst results for cement. Q3, there will be slight improvement. And Q4 should be very good quarter for cement companies. That's the visibility I can give you right now.
Okay, so long-term horizon for cement companies, 2 to 3 years. While we are talking about what you both like, what are the things that you are bullish on, Jiten, what are some themes which you would tell investors to stay away from, or you yourself are looking at with some negative bias right now?
So, and these, we have been staying away for quite a while. I mean, whole of 2022, we stayed away from IT because we could see a couple of things. One is the massive overvaluation, and second thing were impending headwinds because of the US and Europe slowdown. So, so we kind of stayed away from them. Just recently, we recommended one IT product company where valuations were in favor. This is a sector which should come on a radar this year if there is some more correction. So it's not that we are not positive on the sector from long term, but it's just that valuations should be in favor, and that's where we look at. So maybe another 15-20% correction is what would interest us to look at them. Second is generic pharma, specifically the export-oriented ones, is something which we have stayed away from, and we still want to stay away from that. Domestic for pharma is something which we do like, and we have some recommendations there.
Okay, all right. Sid, what about you? Before we wind down, wanted your view on the markets. 2023, how difficult is it going to be? What's your stance?
It's going to be, it's going to be very, very difficult. Usually well begun is half done, not in the stock markets. I think this year is going to be, we've had 7 years of positive gains on the Nifty. I think the thing is, the Nifty Metal Index has just made a new lifetime high today, right? And nobody's talking about it. So inflation is going to be higher than what people expect. Real interest rates are going to go up. And I think you're going to see massive correction as far as valuations is concerned. So high P is one space where you need to be very, very careful about, right? Cost of capital is going to increase dramatically. And I don't see this year to be very good for the stock markets.
Okay, all right, throwing some caution in there, Siddhartha. But gentlemen, it's been a pleasure talking to you all. Thanks so much for joining in on the show. Jiten, for taking some time off. The kids are down, I believe, from their studies, but have still taken some time off, so we appreciate that. And Sid, smooth sailing, but joining us from the cruise. We're lucky, you joined in and gave us your pick. So thanks, gentlemen. Wishing you all a rocking 2023 to you all, your families, personally as well as professionally.
All right, with that, we've run out of time in this episode of Inside Out. It's a goodbye from Nigel and I, but do write to us and tell us all that you want us to feature on the show, and stay tuned for more updates.